So we have the Naira expected to strengthen further against the dollar due to expected month-end dollar flows from energy companies and weak demand at the official window as well. What's your outlook for the local currency for the month ahead?
Well, the expected oil inflows that you're talking about has more or less taken place last week and early part of this week. So going forward, we believe that with the drying up of these oil inflows, we're likely to see a situation where towards the end of the week, we might see the Naira begin to depreciate once again against the USD.
Of course, movement on that currency front is dependent to a large extent on the status of current reserves and the build-up that we're seeing on that end. One would assume that with oil prices up and production levels improving, the status of reserves would be improving in tandem. Are you seeing that filter through?
Yes, we believe that the current oil prices, and particularly we see that yesterday oil crossed the $100 mark, and it looks like this will be sustained for some time. Production is up. The latest figures say that we are producing about approximately 2.4 million barrels in oil and condensate. So we believe that with these two factors, we should see a growth in the reserves. That hasn't happened recently, but it's attributed to certain things like payments for joint venture cash calls and some spending by the government. But in the months ahead, if we do have the sustained levels of oil prices and production is still kept at this level, we expect the reserves to begin to go back up.
Putting that, the ability of government to protect the Naira, if need be, on what kind of a ranking?
Well, the central bank has said that this year, one of their major proposals is to maintain price stability, and in that vein, exchange rate is also a key item in that, and we believe that with the growth in reserves that is being anticipated, it would give the CBN more muzzle to be able to support the Naira.
To what extent does the Egyptian scenario change your forecasts, if at all? I mean, are you paying much attention to the developments that are unfolding on that end, where it's that Suez Canal route and possible lack of access to that route causing some jitter on the oil market?
Well, yes, it is. It's actually the immediate impact of fears being expressed by the world about that region that has led to the spike in the oil price above $100, like I said, first time since 2008. If this continues, the oil prices can only go up, and the short-term effect for the exchange rate in Nigeria is that it should be able to support the exchange rate. Because the fact is, in Nigeria, a lot of Forex users have become reserve watchers, in the sense that they monitor the level of reserves. When they see a sustained depletion in the level of reserves, this leads to acceleration in demand, or you could call it panic buying, where purchases that would have been made maybe 3 months ahead are made immediately, and this puts pressure on the rate. But where you have a situation where the reserves are going up, then there's more confidence in the market. We don't see the accelerated demand. We don't see that much pressure on the exchange rate.
Yep.
So it should mean more stability in the market.